The golden rule of financial control: why all sales proceeds must go into the bank first. Cash is the lifeblood of any business, but without discipline, that same cash can quietly leak away, leaving you struggling to grow or even to survive. One of the most important rules in financial control is simple but powerful. All sales proceeds must be paid into a bank account first before any expense is made. In this video, we'll explain why this rule matters, how it protects your business, and real-life scenarios where ignoring it has ruined otherwise successful enterprises. Why should all your cash sales or income flow into the bank before you touch it? 3 main reasons. 1. Accountability. Putting money in the bank creates a clear trail. You can track how much came in and how much went out. 2. Discipline. It prevents impulse spending. Once money hits the bank, expenses can be properly authorized and prioritized. 3. Transparency for growth. If you ever need investors, loans, or partners, your bank statements become proof of your financial credibility. When business owners allow expenses to come directly from cash sales, it feels convenient. Need to pay a supplier? Just pull from the till. Employees want transport money? Hand it over from today's sales. But here's the danger. Over time, the business loses visibility. You won't know how much you truly earned or how much was spent. What looks like covering costs often becomes silent leakage that eats up your profits. Take the case of Sophia, a small restaurant owner. Each day, her staff collected $500 from cash proceeds of sales. Instead of banking it, they used part of it to buy fresh food ingredients, pay casual workers, and cover small errands. At the end of the week, Sophia thought she had made $14,000, but only $8,000 was deposited with the bank. When she later applied for a loan to expand, the bank said, "Your account doesn't show strong inflows. We can't approve this loan." Lesson: by skipping the bank deposit step, Sophia destroyed the evidence of her business strength. When all proceeds are banked first, 3 good things happen. 1. Clear cash flow records. You can see what entered, what was spent, and what balance remains. 2. Budget control. Expenses are no longer random. They must pass through a decision-making process. 3. Access to credit. Banks look at your deposits as proof of turnover. No deposits, no loan. Consider Arnold, who runs a clothing store. He deposited all his daily cash sales into his bank account even though his friends said it was unnecessary. 3 years later, when he wanted to open a second outlet, he presented his bank statement, showing steady inflows. The bank offered him a $100,000 loan with confidence. Meanwhile, his competitor, who spent directly from cash sales, had no records to show, and the bank turned him away. Moral: depositing first is not just discipline, it's building your future credibility. Many entrepreneurs resist this rule. You'll hear excuses like, "It's stressful to go to the bank every day. Small expenses are easier to pay directly. The money will still be spent anyway, why delay?" But these excuses create bigger problems later on. Convenience today can cost you control tomorrow. Digital banking, mobile deposits, and POS terminals make banking inflows much easier than before. There's no excuse anymore. Isabella ran a mini supermarket, where staff often dipped into sales to cover small operational costs. Over time, she noticed stock was reducing, but profits weren't growing. After investigation, she realized $2,000 to $5,000 was leaking each week because no one was accountable for direct cash spending. When she enforced the bank-first rule, the leakage stopped. Expenses had to be approved from the bank account, which forced discipline. Here's how you can implement this golden rule in your business. 1. Bank all cash sales daily. Even if small, deposit them. 2. Set up expense accounts. Once money is in the bank, transfer a set amount into a petty cash account for small expenses. 3. Keep receipts and records. Every expense must match with bank withdrawals. 4. Use digital tools, mobile transfers, and expense tracking apps to reduce reliance on physical cash. The golden rule of financial control is not about making life difficult. It's about building discipline, transparency, and long-term growth. Always bank your sales proceeds first. Don't let convenience steal your profits. Remember, money is safest and most powerful when it flows through the bank before it flows out of your hands.